And gold has once again proven its ability to dominate headlines, with 2025 delivering dramatic price swings, historic rallies, and renewed attention on the precious metals market. Investors have watched safe haven demand collide with shifting monetary policy, geopolitical uncertainty, and explosive moves in related assets, most notably silver, which stunned markets with a once in a generation surge. As the year closed with an unexpected pullback in gold prices, questions remain about what truly drove the moves and what lies ahead. To break down the forces behind gold's rise, silver's extraordinary performance, and the outlook for the months to come, we're joined by Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, thank you so much for the time.
Theresa, always good to be here.
Now, I want to start with what is the single most important factor behind the rally in gold in 2025?
Well, I think you were alluding to it in your introduction. Very well said. Uh, Considerations around safe havens, I think, was how you phrased it. Words to that effect. That the U.S. Treasury, the U.S. dollar, and in the form of Treasury bonds, Treasury notes, had been seen as the safe haven for foreign reserves for countries all over the world for well, really, funnily enough, since the U.S. dollar came off the gold standard over 50 years ago. So rather than gold, which is heavy, people have been governments, to be specific, have been holding their reserves in U.S. Treasuries. Well, the the price of gold was bouncing around, so trying to get through 2000, and it couldn't sustainably get there until 2024, early 2024. It broke through, never, it seems, to look back. But I think there was a lot of factors in there. But in this past year, it's been largely the U.S. Treasuries are no longer seen as the safe haven they once were, or certainly not the sole safe haven. We had seen up until this year, Bitcoin and other cryptocurrencies, so called, take up a lot of the slack because they were independent. They were something that was priced in US dollars, but independent of US dollars, in that they weren't being issued willy nilly to pay for the debt. They wasn't affected by US government shutdowns of federal services. They were produced at a regular and decreasing rate rather than an irregular and increasing rate, the way the greenback has been printed in the last number of years. So what started in 2024, I think, accelerated in 2025. As a result, putting a long-winded story short, people just don't like or trust the U.S. the way they used to. So they're looking for other alternatives. Bitcoin has had a good long run, and I think it's gold and silver's turn.
Well, how much of gold's strength is tied to central bank policy, especially interest rates and expectations around future cuts?
Well, I think there's certainly something to do with that. To the extent, as I was saying earlier, to the extent that monetary policy is easing. It's a little bit different than saying the government's printing money, but not totally unrelated to the government printing money. Fiscal policy, that is what the budgets of government say, and monetary policy, the amount of the money supply, are, at least in theory, separate. But oh my word, it's a cluster foul up in the United States right now. That's just a strong language I'm allowed to use on news forum, apparently, where the chairman of the U.S. Federal Reserve is facing allegations of wrongdoing by the Justice Department, and the President of the United States is saying, well, I'm going to let the Justice Department decide if he's a criminal, around the expansion or renovation of the Fed building, unless Mr. Powell is actually pocketing money, which I severely doubt. I've seen renovations take criminally long, but I've never known them to be actual criminal enterprises in and of themselves. And Mr. Trump, President Trump, call your office regarding the expansion of the White House ballroom, or the so-called now Trump Kennedy Center. So, to the extent that investors, foreign governments, and others are losing confidence in central banks, particularly the U.S. Federal Reserve's independence of the executive branch, of the president and his office. That's problematic, because the independence of the Federal Reserve has been one of the key underpinnings for the U.S. dollar being the world's reserve currency. It's made a lot of things possible for the United States. They could print money forever, it seemed, and have almost no inflation. Uh, is it a coincidence that as governments lose confidence in the US dollar, that inflation, as measured by the consumer price index, has begun to take off? Because there isn't the buying that there once was. So as long as foreign governments are willing to take excess dollars off your hands, you don't get inflation. When they stop, you do, and that's what we're seeing.
Well, gold's little brother, silver, rallied over 200%, 250% to be exact in 2025. What's the story there?
Well, I think it's similar. Silver is its own creature as well. Um, uh, as the great philosopher said, you can't find gold in a silver mine. You can't find whiskey in a bottle of wine. I have no idea how that applies to this conversation, but the silver, it has at least industrial uses. Gold is there to sit there and look at. There's uses for jewelry. There how weddings are brokered in much of Southeast Asia and some of the rest of the world. But silver has actual uses in communications and others. So it has a dual function, both as a store of value and as industrial uses. So communications being one of those. So I think silver's rise, which is more or less approximates that of gold, is, well, it's a lot cheaper. I mean, you have to have a lot more silver to have the same value as gold, but to buy a bar of silver is a tiny fraction, a hundredth approximately, or 50th of a bar of gold. So yeah, so it's another store of value, a cheaper store of value, and Grisham's law has said that inferior currency tends to push out superior currency, which this may be a manifestation of. As gold gets to a certain price, other things that are considered both solid and timeless and a store of value will take up some of the slack. So those are the two factors.
And with silver surging over 250%, as I've mentioned, are we entering a precious metals rotation where silver could stay in the spotlight?
It certainly could. I never like to talk about gold without putting a shout out to my late professional colleague Nick Barishev, whose company BMG. He ran specifically on the idea that gold would get to $10,000 an ounce, and he wrote a whole book about it, literally called $10,000 Gold. Now, the trouble with waiting for a particular thing to work out is you may not live long enough, as Nick did not live long enough to see this huge gold rally. If you're just waiting for that one thing to take place, you may be right, but timing is kind of important when it comes to investing. So I do think both gold and silver, but I don't think silver in isolation of gold. As I think I alluded to or said earlier, silver is running at least in part because it's a cheaper way to play the precious metals business. It's 4,000 odd dollars, 4,500 US dollars to buy an ounce of gold, and again a fraction of that to buy an ounce of silver. So you can be in the game. I mean, even Berkshire Hathaway did I think a 10-for-1 split with the Berkshire Hathaway bees just to make it a little more accessible to the average investor. So I think there's an element of that going on with silver. But yes, I think both will continue to do well. I would not be surprised if we see a significant enough run in gold, whether Bitcoin, Ethereum, and the other cryptocurrencies come back, and also stable coins of various, both based on fiat currencies, based on government issued currencies, and possibly on precious metals as well. You see, because gold is bulky, silver is bulky. You can't really travel with it around, but there may be a market at some point for a stable coin based on the precious metals, which has a fixed value that you can actually anchor to, but is much more freely tradable and liquid than the actual metal ever could be.
Well, Brendan, thank you so much for that breakdown. We appreciate it.
Thank you, Teresa.